Hello everyone, welcome to the MSI Summit 2020. My name is Careen and I'm going to share with you how you can save your mortgage interest and reduce the loan tenure. I'm also going to share with you the importance of managing your mortgage using technology rather than to try to do manually. And before I start my presentation, I'm going to run this short video, which is just 1.5 minutes, to introduce to you PropTech, which is the Fintech mobile apps solution.
Introducing PropTech, a fintech mobile application combining finance and technology. PropTech is a user-friendly and hassle-free mobile app designed and offered to users by World Property Management Technology Foundation to help them experience effective and ease of mortgage and loan management. Designed for convenience, PropTech lists transparent mortgage schemes that are easy to understand to reduce the time required to study the floating rate effect of loan interest. The mortgage details provided are important and relevant. PropTech promises accuracy. In addition, advice on decision-making for future financial planning that emphasizes on lower payable interest and shorter repayment tenure is offered to users. With such professional guidance, each user can expect better mortgage and low loan risk. Join our program today and use PropTech. Let PropTech benefit you in your mortgage management and financial investment.
You can find us on Facebook or you can see it on the YouTube. Okay, now a short introduction of myself. I used to be in senior management for a financial institution, and I've worked in the bank for more than 25 years. And interestingly enough, my last project was a mega project to develop an in-house banking system for loans and deposits. Well, I'm also an investor in properties and I own a retail business as well when I retired from the bank. So I was also certified as a trainer with my passion of sharing and training. And because I was really very keen to learn more about mortgage management, I decided to, last year, I decided to get myself certified under PropTech as their advisor. So what I'm going to cover is the two parts. One is to show you how to save your mortgage interest and to reduce the tenure. So I will introduce the PropTech Foundation, the issues today, the impact of fluctuating interest, and paying correctly so that, to avoid our tenure being extended, and whether if you can pay a lump sum to reduce, does it work? So that's part one. And then part two would be really what are your options after the 6 months moratorium? Because if you have taken the moratorium, you have to understand this, the bank is not giving you free interest. The 6 months interest is going to be charged. So what are your options? And of course, what will be your next step? So this PropTech is actually a foundation, a non-profit focus. It has been set up in 2017 under Yayasan Teknologi Pengurusan Hartanah Sedunia, founded by Dr. K.M. Cheong. And he actually has been in this mortgage management since 2008. And the FinTech apps was developed and was running for some time now, about 2 years. And he has done really a good job. Over the last 12 months, PropTech has saved almost 50 million of interest for borrowers. So if you notice, as per 201A, in Malaysia, the household debt is close to 1.18 trillion. And out of this is 53.2% is housing loan. So, it's a huge figure. 628 billion of household debt from housing loan. And of course, car is about 13.8%. And I believe the figure has definitely increased a lot with in this 2020. And the issue today is about how much and how long have we been paying in this consumer these papers 2008. The borrower was really shocked to find that after paying 16 years, he still owed the bank 36,576. And I'm sure a lot of you may not even notice in your loan statement, or whether some people got read not the loan statement, how much more principal you have to pay, or how much more interest that that is outstanding. So in my time, I think we take our loan is, which I think many of you may relate, we normally would take 25 to 30 years, but our new generation now, they have to take like 35 to 40 years because of the affordability and the pricing, you know, of the property in the last few years. So essentially, we see that they are not able to be financially free. You know, in fact, perhaps even the burden will go on to the next generation, and this is really something that we should look into and avoid. So, if you understand, I think most of us understand this part, the mortgage structure, that in the first 5 to 15 years, the interest portion could very well be in the range of 70 to 75%. That means out of the repayment amount that you are paying, a huge amount goes to the interest. Very little goes to the principal until the later part in the in the loan. Only your principal gets knocked off. Give you an example in figures. Perhaps you can relate better. Say if you have a loan of 700,000. Based on 30 years and effective rate, say it's 4.5%. Your repayment could be like 3,005. All right. Do you know the interest portion for a 700,000 loan is 576,000, and in total, you actually are paying 1.2 million. This is quite amazing. The amount of money we owe the bank. Now, after 10 years, if your loan is still standing at 302,000, all right. So the interest portion is really is still at like 71% after 10 years. So we always have this perception that there's no choice. All right, no choice. So when our loan is approved, we're very happy. We just take it. We didn't even look at the letter offer, just sign only. But do you know that we fail to realize that when we retire, we still have to pay our housing loan, and that is quite a shame. And we actually have to change this perception, and we can help you pay off your mortgage faster. So you may ask, what is the mortgage management? Why need to manage? I thought you just buy the property and after that you will manage by yourself. That's not really true. The financial part is quite important to manage. Not just tenants and so on, it's the financials. The first factor will be, of course, the fluctuating interest rates. And when you pay the incorrect payment, it actually would lead to compounding interest. And I'm sure you understand compounding interest can be quite substantial. And number 3 would be additional interest like fire insurance or late payment that you have failed or forgot to pay, and eventually your mortgage tenure is extended. So these are the things that we need to manage. Now I'm going to run through 3 important areas. One is the impact of fluctuating interest rates. And I think most of you would know that prior to 2015, banks would be quoting us using BLR, base lending rate, and after that was base rate. But whatever you have to is to look into your letter offer that was offered to you, and you must look at what is the effective rate. For example, if yours is prior to 2015, your offer letter is minus 2.4. So your current BLR minus 2.4 will be your effective rate. Base rate will be on top. So it's the effective rate that is important. So if you notice, the bank rates have actually been changing very, very often. In fact, 2020, you will notice the rate has changed. OPR has changed 4 times, And after this period, hopefully, if pandemic is over and economy is back, recovered, I am very, very sure the interest rate will go up and up and up again. So we have to understand what is the impact. I'm going to use this example to show you the impact. Say if you have a 500,000 loan and your repayment is 2,533, at the rate of 4.5%, your interest portion is 1,875. Okay, that's about 74%. And what happens if the interest rate goes up by just 0.5? You see, when interest go up by 0.5, your interest portion goes to 2,083, and the interest increase is 8.22. No, with this 0.5, interest extra is 8.22. So the impact is huge. And if it goes by 1%, the interest increase is 16.44%. That's how the interest portion increase a lot more. So if you are looking at just 5 years, an increase of 1.3% would essentially means that you have to pay an extra of 184,000. That's a lot of money, right? So, but that is how bank would charge you. Now, the second area I want to go through is that the importance of paying the correct amount. We do have real case study, which we have done, many, in fact, many, and we can show you some of these case studies. If I were to show you this, a simple one, 500,000 with 30 years of 4.861, you see your repayment is 2,566. So your interest portion is 1,920. So that means your principal knockoff is only 645. Okay, fine. Now, when interest goes up to 5%, and if your repayment is the same, all right, normally bank will not increase the repayment one. It will be the same. And so what it means that your principal knockoff or reduce will be much less, 482. So if you keep on increasing, your principal just get reduced less and less, and to a stage that it can become negative. But in the loan system, our principal feels amounts are never negative. So it means that your loan tenure have to be extended because you're still owing the bank because your repayment has not increased. Okay, so that is what happened. So when we do analysis with the fintech system, we can show you this case, which was 35 years, 420, and has paid 14 months. So the remaining by right should be 380, but the system, looking at the figures, shows that you still have to pay 415. So it means that your loan is extended by 35 months. And if you are, and it's because of the BRR that has increased by just 0.4%. So imagine if you are the borrower and you look forward to wow, I don't have to pay anymore. But eventually you realize, I still, when it comes to the end, I still owe the bank 35 months. 70,000 I still have to pay. All right. So, and the installment that we can help you to save, instead of paying some more installment, can save you quite a lot of money. So I think it's quite important for us to understand how this whole thing works, for the mortgage management interest. The third point is I want to put up is that many people have asked this same question. Can I pay a lump sum? I just pay 10,000, 100,000 to reduce my loan interest. We can actually simulate for you. Now, this case is a real statement, it's a real loan statement where this person paid 10,000, 10,000 on the same day. And look at the interest that is charged. The difference is so minimal, it's only 46 ringgit. You pay so much, you get so little savings. All right. And if you have 100,000 and you think that you just bank in, unless you restructure your loan, you will be getting calls from income tax as well, where you get all this money as well. So it's not a very wise way to do it. Now I can just do very quickly to show you why your lump sum is not going to work. Assuming 600,000 at 4.5%, your monthly interest is 2,250. We just do roughly now because we're not using daily interest. Actually, bank would use daily interest rate. So when you pay a 50,000, all right, at 4.5, your interest, yes, will reduce to 2,062. So you actually save 187.5. But I want to highlight to you what happens when your interest change or reduce to 4.75. When there's a change in interest, the system will recalculate. And when the recalculation happens, your interest then become 2,177. So your loan reduced is only 72. So it doesn't really justify putting in 50,000 and reducing only 72 ringgit. You might as well put it in FD or some other high yield investment or something. So that doesn't work. All right. So you ask me, oh, so how can I save on the interest payment? So here I give you one example of a customer statement where he over 6 months, you look at the outstanding balance 396,357 and here 394,057. He paid 6 months already. That means he 1,009 times 6 is 11,400. He has paid 11,400. But the difference in the outstanding is how much? You minus and see. It's only 2,299. So where did all the money go? All right. It doesn't go to the principal. So this is quite can be quite awakening, I would say. Like, how can we help you? So with our Fintech PropTech solution, we can help you manage your mortgage better by what? Not just paying more, by paying the correct amount. By paying the correct amount. So what can we save? Now, the principal we can't save for you. If you owe the bank 500,000, means you have to pay 500,000. But what we can save for you is actually the interest. We can actually, system-wise, we would go with, we have a list of banks that we would know how to do that, and our system will be able to calculate the correct amount for you to pay, and so you can reduce your interest. And you ask how much can we save? All right. Now depends on how much you can afford every month to pay extra, how much. So we have a SIM 25, which will help you reduce by 25%. And then we have a SIM 50, which will help you reduce by 50%, and the 75, which will help you reduce by 75%. Okay. Now SIM stands for / interest methodology. PropTech system has got this methodology where if you choose SIM 25 because you probably have a low budget in terms of extra cash flow, we will help you save 25% of the interest, and the loan tenure, all right, can be cut short by 7.5 years to 22.5 years. SIM, if you have more cash, all right, if you project that you will have more cash flow, you can actually go on a higher SIM, 50%, and we can save more for you, and the loan term also will cut short by 50%. And of course, if you want to quickly settle your loan, you have a lot of cash, so you have 75% SIM, you will just bring down your loan tenure to 7.5. This is really quite interesting. So we are not looking at huge funds that you need to come up with, or maybe perhaps your loan is not even entitled or qualify for refinancing, and we using the methodology with Protect, we definitely can help you. So here I won't do the demonstration, all right? Maybe later, if you are interested, you can always do that. And in fact, there's a free feature in the apps, which is the repayment analysis, but you have to key in your information. All right, so once you key in the information, the system actually do an analysis for you. So for this customer JY, it's quite a new loan. So 1 month, his interest portion was 79%. Okay, that means out of 1,005 installment, he has to pay interest of 1,002. And over 5 years, his interest portion only goes down very little, 78%, and then 10 years, 72%. But when he uses the PropTech SIM, his 5 years, it can go down to 70%, even better than not using anything for 10 years. So it's actually like fast tracking, getting the right correct amount to pay, and after 10 years is 59%. So this is the repayment analysis. But we are able to also do a full mortgage analysis and simulation with the SIM for you. So in this case, this is a real case for JY's loan, which is he's 29 years old, it's a new loan, and his installment was supposed to be 1,535. So here we simulate 2 options for him, SIM 25 and 50. Now, SIM 25 will require him, so we give him a range, 1,006 to 1,667. This is the first 12 months and the first 5 years. What kind of increase in terms of the installment? All right, and our analysis show that we can save for him 82,000, which is about 26%, and tenure we can cut short by 9 years. That's really very good, especially new loans. So he actually chose 25, SIM 25, because depending on budget. Of course, SIM 50, if you pay a bit more. All right, if you have the funds, you should go for SIM 50 or even SIM 75, because the savings is a lot more. Now, after you have subscribed to the apps, all right, they will actually give you a full ledger, and this ledger would have every month detail for you. You must pay accordingly to the right amount, all right, instead of paying the bank 1,535, right? So that's how it works. So to summarize his savings, of 82,000, you also have a savings of installment of 9 years. You don't have to pay 9 years short, 9 years reduced. That's a lot of money. Okay, so what's the next step? The next step is that if you want your mortgage to be analyzed, you need to provide me these documents, okay, this information and documents, and we can then, after the analysis, we will give you a report. Okay, the report will show you how much you can save for the 3 options, and how many months technically we can save for you. We also have, once you are on board with us, we also can help you with managing your whole portfolio, property portfolio financials. That means you have a session of borrowers awareness for you, so that if you have more, you have a few loans, for example, you have a few mortgages, you have to look at it, each one and do your analysis for each one. And we should be able to look at your total repayment roadmap, your interest payable, standby cash, rental assessment. Because with this, then only you can look at your portfolio and say, okay, which property is probably not giving me the rental income or the right yield, and I have to really sell it off. So you need to know which one you need to let go, which one you need to probably keep. Okay, so we do have clients with 20-30 units. It's amazing, they buy so many units, and then now they're struggling, and they need to know exactly which and how to manage which one. So the financial part is really quite important. All right, so that's my part one. All right, part one. So the part two, I just run through quickly, is now we are in October. So you need to start, if you have opted for the moratorium, you need to start paying, in October. So that time, banks were saying that they won't compound the interest. All right, so but to us borrowers, what is the impact? What is the impact? You have to ask yourself. All right, what happens? Now, we actually have expect borrowers to consider three possible options. All right, the first option is to pay the 6 months interest. They are not giving you free, Look, the 6 months they're going to charge you, the bank is going to make you pay. But you can also choose to pay all the 6 months one shot, in October, if you have a lot of cash. So your loan repayment and tenure will remain. The second option is to continue paying the same repayment, all right? And the loan definitely will be extended. And the third option is to pay a higher repayment for October to accommodate the increase, the 6 months interest that is going to be loaded in, and the loan tenure will not be changed. But of course, now, the interest rate is low. This is really a good timing that we should quickly pay off our loan faster, pay more. So which option is more expensive? Actually, option two. The answer is option two. This option two, if your repayment, say, is about 2006, interest is about 1007, do you know the 6 months interest will cost you'll be total about 10,000, but actually the bank will be slamming you about 30,000 because of the compounding effect. So number two is a very expensive option. If I were you, I would do number three. That means pay higher, pay more, and the tenor will not change. But of course, if you know PropTech has got a solution, you should use PropTech, because PropTech will not only help you to reduce your interest, it helps you to reduce your loan tenor by just paying more, but not just more, correct, by paying the correct amount. All right, so option three is viable, but I would think 3A. 3A is that you should actually use PropTech system and pay the correct amount, higher amount, so that your loan will be settled and will be reduced faster. So if you are interested to have your analysis done, you need to submit to me all these documents. Don't take too long. Submit to me all these documents, and I'm giving you a very, very special offer at this summit. The promo code is MSI Prop. Okay, and I will just do. Normally we charge 100 ringgit for analysis, but for y'all, I'm going to just charge 30 ringgit just for my time and all the effort to go through the documents and do your analysis. It's really a fantastic, awesome deal. So you have to WhatsApp me if you're interested, and we will do a full analysis for you and give you the report. And then after that, we can even give you a demo of the apps and and whatever case study if you are still more keen to find out. Now, for those who have, if you have decided and you pay the 30 ringgit for this analysis, I'm going to give you one more voucher because I know some of us have more than one loan. So valid for 3 months, you get another voucher. That means you get to have one more analysis done for one more loan. It can be your family or your friends, all right, or your own self. Okay, so this is very, very special deal for you. So don't miss out. Don't miss out. Huh? And I tell you, this is very important. You may say, a lot of you may have not the time, but really I would encourage all of you to take time and look at your bank statement and look at your loan, your commitment, and do your analysis, because once you do your analysis, then you understand your financial for the next 20, 30 years or 40 years, to go. So thank you very much for listening to me, and I hope you have learned something. All right, and if you have learned something, please do your analysis. Okay, it's only 30 ringgit. It's not going to cost you a lot, right? So with that, thank you very much and have a great weekend. All right, bye.